Hi guys, Michael here, and this is another video from the series where I share with you the strategies that I found on the internet and share with you the results of the backtest of 100 trades. This time is the strategy which is a combination of two RSIs. Basically one standard RSI where the time frame is the same as the chart, and the RSI that will give you the more or less overall look at what is the current trend on the market. So I also, as I said, backtested it for 100 times. It took 100 trades, more or less it took a year period. So I started more or less at the April 2020 and it finished around May or June 2021. So yeah, it took a year to conduct those 100 trades, yeah, this was based on a 15 minutes time frame, so it should be a scalping strategy, but there were not as many trades as you would guess from the 15 minutes time frame. So yeah, maybe let's just jump right into the platform and let's talk about the trades, let's talk about the conditions for either buy and sell, and of course take profit and stop losses. So I need to tell you one distinguishment in the beginning, because you will be able to check this strategy I think only on TradingView. I checked the MetaTrader and you don't have this option to set the one indicator from two time frames. So this will require you to install or check the TradingView platform. So yeah, let's dive into. Let's go for the indicators. Let's add them. RSI. So you have them in built-ins, section of the indicators, relative strength index, once, twice, and yeah. First one, we are leaving the settings as they are. So a length of 14, the period which will the indicator analyze. As for the style, we are leaving the upper band for the 70 and the lower band for 30. If you are not familiar with the RSI indicator, so more or less you are using the RSI in a it should filter you the overbought and oversold zones. So basically, when the indicator is below the 30 line, which is, maybe let's zoom in, which is over here, this one. So when the indicator is over here, this should suggest you that the market is currently oversold, and when it is above, it should suggest you that the market is overbought. Which means, in a nutshell, that when the indicator goes above 70 and it starts going back inside this this purple line, it should either suggest you that you should more or less looking for short trades, and in the opposite direction the same thing. When the price, when the indicator will go below 30 level and came back inside the channel, thus it should suggest you that more or less you could be preparing for a long trade. So that's the basis of the RSI. As I said, we are leaving the first one as it is, and the second one we again are clicking in settings, and in inputs we have the time frame and changing from same as the chart to 1 day time frame. That's the first thing. And the second thing, we are changing the upper band for 60 and lower band for 40. By doing that, we are broadening the spectrum for the identification of the uptrend and a downtrend. So when we lowered this upper boundary, the upper line, so we have the greater space where we are in the uptrend, and by raising the lower band, we are broadening the space when we are detecting the market as a downtrend. So with that said, the rules, the conditions for sell and buy trade are as follows. Maybe let's start with a buy trade. So the conditions are as follows. We have a good example over here. So these are for the long trade. First thing first is that this RSI based on a daily time frame should be above the 60 level, which determines us that the trend is upward. And on the more responsive RSI, we need to have the line of the RSI need to go below the 30 line and went back to the channel, went back inside the channel. This is triggering us an entry on the long side of the market. So let's discuss this moment over here. We entered below the 30 line, and here we went inside the channel again. We crossed the 30 line to the upside, and as we can see, it occurred on this green candle. So this green candle closed, the oscillator went inside the channel, as we see over here, and we are entering at the next candle. So this is our triggering candle, and the entry is over here. So let's mark that. As for the take profit and stop loss, as always, as in many strategies, we are taking more or less looking for the lowest low, the nearest lowest low. So based on that level, we are setting our stop loss a little bit below, plus a commission, plus spread, plus 1 pip for the market noise. And the risk reward ratio in this strategy is suggested to be the suggested risk reward ratio to this strategy is 1 to 1.1. So we have 1.5 risk reward ratio. So we are risking, so the potential profit is 1.5 times bigger than the potential loss. So let's spread this trade. And yeah, this one was profitable. So it is when you are triggering, when you are when the strategy, when the entry is triggered, basically you set immediately the stop loss level, take profit level, and you leave it be. So yeah, that is a very convenient and easy to use, we can say, strategy. So that's the first example of a buy trade. Let's look maybe for another one. You can see that there are times when the more responsive RSI is above the 70 line, but we are still in an uptrend. The daily RSI is still above 60, so we are not looking at those moments. We need to go further, and we have situation over here. So let's check. We can clearly see the RSI is still above 60. Let's zoom in. Okay, and we have the moment on this green candle. We went inside. This red candle was still below. You can see it here. It was below the 30, and we went back inside the channel on this green candle. So we are entering at the next one, which is this red one. So let's again mark the trade. As for the stop loss, we are looking for the lowest point. For us, the nearest lowest point, which is for us is over here, below this notch. Sorry, no. Okay, so let's set it, and let's set risk reward ratio 1.5. More or less. Okay, we can see clearly that this one was also profitable example. So these are examples for a buy trade. Let's go down the line and look for the entries on a sell side on the opposite direction. So let's maybe zoom out a bit and see here. This one most likely will be a loss, but either way, let's check it. Okay. So you will most likely come across such as those situations also. So yeah, we need to talk about losses as well. So we have the daily RSI below 30, and we have the more responsive RSI that above 70 line. So let's zoom in again and let's see it in more details, what happened over here. So we crossed 70 line over here on this candle. This red one was still above and still on the borderline, we can say, still, and yet on this on the closing of this candle, we went inside. We went back inside the channel. So we are entering at the opening of this candle, which is over here. So let's mark short trade. Let's see the risk. Let's see the stop loss level, which is above, this notch. Let's delete that. So yeah, you can see that 1.5 would be over here, but the stop loss was triggered before we went, before the take profit would be hit. So yeah, that is the first example of a sell trade. Let's went back and look for another one. This one should be good. I think this one would be profitable. Okay, so we didn't have to look much further. Let's see zoom out. Okay, so you see that the daily RSI is below 40. So now let's zoom in. So the first condition is met, and we have the more responsive RSI over here. So we are looking for the candles. At this candle we broke out above the 70, still above the 70, and on the closing, when this candle closed, we went inside the channel below 70 lines. So we are entering at opening of this candle. So let's place the short position, stop loss. We can say that most logical level would be slightly above this high. I will not be dwelling much in details how much you are adding or where you are setting the stop loss. It's more or less the same method as it was used by the author of this strategy. So I am just saying that I am most often adding one pip plus spread and commission depending on your broker. So yeah, this would be our level for the stop loss, and we are targeting 1.5 risk reward ratio, so it will be over here. And as you can see, this example was simply profitable. So there you go, and now you know the conditions for buy and sell with this strategy. And as for the results of the backtest, I will be sharing you right now. So as I said, it went, let me give a free space to later put on some numbers in the video. So as for the backtest of this strategy, the trades were conducted between the April 2020 and the June 2021. That was the time frame that took me to take 100 trades, and the results are as follows. We had 44 losses, 56 winners, and overall profit, if you are counting the fixed amount of 1% risk based on your initial deposit, it was 40%. So you can see, if you any hedge fund manager, if you would come to him and said that you made 40% in 1 year pure profit, they would be delighted and you will have your job immediately. But you know it, and I know that it's not that easy. And overall, we can say that this profit from the broader perspective looks good, but we all know that there are better options on the market, and it would be better if we could just improve this strategy. And yeah, as for the other data, so that are interesting, because we also need to know this strategy had max 5 losses in a row and 7 wins in a row. Yeah, we can see that risk reward ratio is not that perfect, because it is 1 to 1.5, and we all know that the minimum that is great to have is 2 to 1. Nevertheless, it has a good win rate ratio, and the 40% profit in a year is still something to consider. So yeah, let me know what you think of this strategy. Leave your comments down below, what you think could be improved, and maybe if you tested this strategy before and you can share some thoughts on it. So yeah, that would be all for this video. Thanks for watching, and goodbye till next time.